financial survival network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Great news, we've got a sponsor. This show is now brought to you by Miles Franklin. And when it comes to protecting your wealth, you know there's nothing better than gold and silver. That's what I'm buying. I hope you're doing the same. And once you make the decision to buy gold and silver, there's no better place than Miles Franklin. Look, they've been in business 22 years. And the reason I'm a customer is because when you buy, they ship. Go to milesfranklin.com or call them at 800-822-8080 to get a free quote. $14.90 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. I'm back with a nasty cold, and the gold market got a real chill this afternoon too, but the person on the end of this phone line knew it was coming to the day. I don't know about to the hour, but definitely to the day. Ranting Andy Hoffman is back for his Monday rant. Andy, how are you?
I'm doing okay. And Kerry, I didn't predict it to the day by some formula other than my physical crises charts, which basically what they do is they chart the time intervals between the different major cartel attacks. And when those intervals get shorter, that means the cartel is getting less bang for their buck, and they're having to work harder and more often. Last year, when I did this chart, the diminishing returns, they were doing things 3 months at a time, then 1 month at a time, then 2 weeks, 1 week, and where in the middle of June, in the middle of July, it got down to zero, and that's when gold took off. And I started, a bigger picture physical crisis chart going all the way back to what I call D-Day in November 2010, only dealing with the biggest major cartel smashes, which would include 2 weeks ago the leap day violation. And per this chart, you're seeing the same exact thing except on a bigger scale. First, there was 180 days of difference between D-Day and the silver Sunday Night Silver Massacre in May of 2011, and then that cut down to, I have it right here, to 93 days before, 128 days to Operation PM Annihilation 1, 128, 93, 57 to the February NFP Forest, 26 to Leap Day violation, and now I said, I'll bet you it's 13 days until the next one. And sure enough, we got it. It actually started yesterday, and it's all about this 1750 line in the sand because they don't want it to go through there and break out to the upside, this massive reverse head and shoulders pattern. And just like all the other cartel attacks, this one will fail. In fact, when I made this prediction, I didn't even realize it was a Federal Reserve meeting today. And when I just saw the actual wording of the statement, which came out only 2 or 3 minutes ago, it said literally, and I mean nothing different than they've ever said before. Absolutely, utterly nothing. And if you want to say it's different from what they said 5 weeks ago, because now the labor market has had 1 or 2 of these bogus strong reports, that's exactly what Ben Bernanke said last week. So there is anyone who thinks that anything that happens in gold right now has to do with what the Federal Reserve is saying, it's, be at ease, because they said absolutely nothing. They're going to do. They voted 9-1 to keep the QE or ZERP until at least late 2014. And I assure you that anyone who thinks gold's going to stay down because of this is going to be wrong.
And what's the time frame? Because I guess then another attack should be within a week, right? If we're getting half.
Right, but then again, it doesn't mean that when there's an attack that necessarily means it's going to be some violent, $100 down. It just means that they are, that the impact of these attacks isn't lasting that long. I mean, for instance, silver is still sitting right around that $34 line in the sand that it's been at for 6 months, and that's after 4 major attacks, and it still sits there. So, if silver falls $1 here or 30 cents or whatever, I mean, I'm not too concerned. I've officially made, I say a call. I mean, I'm not a sell-side analyst or anything like this, but from what I see from the fundamentals and the technicals of what they've done with all the attacking over the past year, it seems pretty obvious to me that that $30 key number is going to be nearly impossible to get through on the downside. I just can't see it happening. And, so if it's 34, 32, whatever, it doesn't matter. I'm not concerned at all, and no one should be concerned, and I repeat, no one should be concerned that the Federal Reserve is going to be, impacting your PM investments to the negative. And when I say PM investments, I mean physical gold and silver. You can lose money in stocks. You can lose money in GLD. If you just hold on to your metal, you will not lose.
Hey, I don't know if you caught this article today by Ed Steers, but there's a big stink between Ted Butler and Blackstone because he was complaining that they allowed them to have this huge short position in GLD and SLV, and that effectively they're creating unbacked shares of those ETFs, and it looks like there's a reduction going on there. I mean, that's all part of this game, isn't it?
Yeah, and Blackstone, they're not the custodian of SLV. That's JP Morgan, but I know they're involved in some way, shape, or form. Maybe some trust agent or who knows what.
Yeah, trustee. Maybe they're a trustee.
Yeah, trustee. The point is, here's the deal with all these ETFs, particularly GLD, SLV, and of course, if you want to extend it to all the paper gold securities, such as the futures on the COMEX, every piece of information that you see is a lie. Okay? If you look on the GLD website and they tell you this is our holdings at blah, 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 if you go on the CME website and you say, well, this is the short position, this is our inventory, it's all bull. It is all garbage. I've been watching this for years. There's no correlation between any of these stupid numbers and what the prices do. They don't make sense in what they are saying, and they're coming from crooks. People saying, well, look, this is what the SLV says their holdings are. This is JP Morgan telling you what their holdings of paper silver are. I mean, it's so ridiculous. And when people get upset about these things, I just tell them, ignore it. If you want to own SLV, that's fine, because you'll look at your account on bad days and you'll be like, my God, my account's down $50,000, $30,000, $100,000, and it's money I may not get back. If you just buy the physical stuff, not only are you hurting JP Morgan, but you don't have that problem. I look at my screen today. You know what my account value is today, Kerry?
What's that?
It's down $43. You know why? Because I have everything that's in the market, which is only 10% of what I have. Right. In the GTU and the SBRZF, which are those closed-end
Silver Bullion Trust, one of my favorites, and General Fund,
Trust.
Right?
Yeah. Yep. Central Gold Trust is down 14 cents today. Silver Bullion Trust is unchanged. So my screen says minus 42 cents. And when people own stocks and they own GLD, they look at their screen. That's money that's gone forever. Okay? And if you own the physical stuff, you won't have to worry about this, and it won't get taken away from you in any circumstance. All those numbers that people are talking about are lies. Of course Ed Steer is correct. You'll never be able to prove it, and no one's ever going to call these people on it because it is the government. They all work together. Don't worry about numbers. Worry about the fundamentals. And when I talk about technicals, I make up stuff like the physical crises just to gauge how they're doing, the cartel's doing. They are there every day. They will never stop being there until they're broken, which I assure you they will. They were in 1968. They've been broken every time in history where people have tried to hold gold and silver down in lieu of paper currency. And they will be here in the market every day doing their shenanigans until one day they're gone. Don't worry about the paper prices. Don't worry about the statistics. Just worry about the fundamentals and where you are putting your cash.
Yeah, well, there's definitely a correlation between the way they're trying to hold down gold and silver, the effectiveness, where it's taking more and more contracts, more money to achieve less of a result, and fiscal stimulus and quantitative easing. The more they do it, the less effective it becomes, and it's just a prescription for failure. And yet these guys are just tied to failure. They're married to it. They can't. It's like they've been thrown off a ship.
It's QE to infinity. They have to do it. I mean, that's the definition of a Ponzi scheme. You have to get bigger. Yeah. You also have to maintain confidence, and that's why they have to gold. They can't keep printing money and not try to keep the price of gold down, because then people will lose confidence. And you say, it's taking them increasing amounts of money to get the same job done. The thing is, you asked me before about the statistics that are saying this and how much shares are out there. Look, the open interest on the COMEX has been going down for years compared to the price. And I put this chart up all the time. I have a chart that says COMEX open interest for, let's say, silver to the silver price, and another one, COMEX gold open interest to the price. And we're talking about these charts have plummeted. I mean, they have gone down 90%. And my point is that there are so few actual, quote, market participants in the markets anymore that are fighting the cartel. So they can't even disguise it as higher open interest. They are literally doing things that they're not reporting. I wouldn't be surprised if the actual, quote, open interest is twice the amount they're reporting, because there is no way that the price can just fall that much that fast and have the open interest not increase. I saw, what was it, a week ago, even John Embry, one of my heroes, after the Leap Day violation, King World News asked him, what happened. One of his answers, and yes, he said the cartel's involved, but he said, it's always nerve-wracking when the open interest blows out, because then the speculators are vulnerable. And I'm looking at the open interest, I'm going, what blowout in open interest is he talking about? It barely blipped up in the $200 that gold went up in the last 2 months, and the $9 silver went up. So all those numbers are frauds, and I mean all of them. Don't worry about them. Just own your physical metal. That's all. You want to buy shares? Good luck to you. You may make zillions. You may be broke. And believe me, I had 100% of my net worth in precious metal shares for 10 freaking years. So I know how easy it is to lose money in them when the cartel comes in. Even when the cartel doesn't come in, multiples of mining shares have so dramatically declined. It's comical. And we're talking about for juniors and seniors. I mean, people keep saying, well, the earnings are so good. I mean, look at Silver Wheaton. It hasn't moved in years. Its earnings are exploding, okay? We're seeing that the multiples on earnings are abysmal right now. That they're trading at levels as if you're at the, in a bear market. And when it comes to the junior mining companies, they are literally trading as if we are in the Bre-X era, like they don't exist. So, the only way you're going to guarantee that you're going to beat this cartel, who will not stop, is with the physical.
Yeah, so one day they're just going to go to the COMEX or in London, and those markets are just going to become meaningless then, huh? They're just going to shut down effectively?
Yeah, they are, and they are becoming less meaningful each day. Maybe not, we're so secular here, but people around the world see what's going on. The people with the big money in the East. Also, because of the exchange rate, look, these guys in the cartel, they can't control everything. For instance, if they want to smash gold, but when there's worries about Greece and the euro's falling against the dollar like it was a week or two ago, guess what? Euro gold doesn't go down in price. Euro gold barely budged from its highs, and it's sitting right up near them now. And that's the problem. No matter what they do, they're just creating a bigger mess for themselves. There's more and more people that are exposed to it.
Yeah, it's like whack-a-mole. They hit
That's
one,
exactly what it is.
and another one comes up.
They can't do everything.
Yeah. So,
I mean, look, this is a perfect, because, look, this is an FOMC meeting. They are trying to milk this so hard, trying to create some perception that the Fed is changing its mind. The Fed voted 9-1 today to maintain ZIRP until at least late 2014. And the only guy who voted against it was the same guy who voted against it before. But somehow, they smashed gold on the Leap Day violation, and the reason they did that on Leap Day was because gold and silver were literally about to explode. It has nothing to do with anything else. People were about to lose confidence in paper currency because silver was about to zip through 40, and gold was about to take a run at the all-time high. Hence, they create that. They did it very quickly in back rooms. This one wasn't, the Leap Day thing wasn't plotted like the other ones. They said, we got to do something. Why don't we just, we'll do it on Wednesdays. Bernanke is speaking. We also have that LTRO. Remember, that was an hour before, and that's going to be a huge gold bullish thing. So we'll just do it that day. We don't have the big open interest to work with anymore, like I'm just saying. So let's just smash the market with naked shorts. And sure enough, there was 375 million of paper shorts thrown at the COMEX in a 45-minute period on Wednesday. And now they say, well, it's a week later, and Bernanke has to speak again about the exact same topic, which he said nothing about last week. So we have to, foster this view that he somehow has changed his opinion by hitting gold. Meanwhile, you look at what he said, and he said nothing. He said not a word different than he said a week ago. And he said basically the only word he said different from 5 weeks ago is, yes, we had 1 or 2 good labor reports. Yeah, I think everyone knows that. They're BS, those labor reports. But besides from that, there was nothing that the Fed has said any different than they've said all along.
So the more things change, the more they stay the same.
Yeah, except the more people that understand what they're doing. And the more people in the East that see this stuff, because people in America, they used to revere the Fed. Now I think most of them just don't care.
I think
but people around the world mock them.
Yeah.
People around the world right now, and they're in China, they're reading this, they're going, you're kidding, right? People are the media says that stocks are up and gold is down because the Fed is getting hawkish. You're kidding, right? And they're going to go in and they're going to buy physical. And I'll tell you, watch that 200-day moving average of gold. That's their big bugaboo that they can't break. The gold is 1682 right now. It's about 1677 is the 200-day moving average, which also happens to be the shoulder of this massive 6-month reverse head and shoulders bottom formation that's about to break out. The leap day violation, all it did was really carve that shoulder even further and make it even more difficult. And I can guarantee you, all that's going on now, all these machinations, are that they are desperate to break that formation because they know, look, short-term technicals mean nothing in precious metals. They mean less than nothing. But what happens when they do all this smashing day to day is they create these massive long-term patterns. And the reason being, if you keep smashing something like capping at 1750 day in and day out, and month in and month out, what do? You get a massive, massive resistance line. And when it breaks finally, which it always does in gold over the past 11 years, it becomes massive support that cannot be broken. And it happened with $20 silver, for instance, back in 2010 after a year. And now I think they did it with $30 silver. With gold, look, that 200-day moving average, which is creeping up, it's up to 1678 or something like that. Gold is, if you go back to 2001, gold has been under that 200-day moving average about 5% of the time. Almost all of it, by the way, was at the bottom in 2008, which was another major cartel attack. That's the only time. It doesn't trade below it. They tried it in December. It made it for a week. It was the only short-term prediction I ever made, was that it wouldn't stay under there long. It made it for a week, and it's the same thing now. If it goes under that 200-day moving average, you can bet it's going to come back.
Yeah, no question. And the other thing that happened today is that gold fell below platinum once again. Interesting little tidbit.
God. Boy, how about that? I didn't even notice it today. It just went quickly.
Platinum is down $2, and it's 1692.
Yep, 1700 for platinum and 1686 for gold. Well, look, my views on platinum, there's a lot of pros and cons, okay? The major con of platinum is that it has never had a monetary history.
Exactly.
There's never been a platinum standard. People haven't traded platinum coins. The biggest reason for that is that it's so rare. And that's what boosts its value, is that I think there's only 6 million ounces of platinum produced in a year compared to 80 million for gold and 800 million for silver. So It's so rare, plus a lot of it is used for catalytic converters, that it's hard to even find. And, I know David Schechtman at Miles Franklin, he's a very, very big bull on platinum, because he's like, look, if you really want to protect yourself against confiscation, let's say it was going to happen in gold, they would never do it in platinum, and because there's just not enough out there. So, my view has always been, look, platinum is going to track upward with gold and silver. I don't know if it's going to massively outperform it, but it typically trades at a 20% premium to gold. Right now, it's about at parity. We'll see what happens in the future. But I'm not too worried about platinum. I just don't know if it will move with gold or at a greater pace or at a lesser pace.
And it's such a small market, like you said, that talk about manipulation, but there's no real desire to manipulate it except vis-a-vis gold and silver, because it's really just I know it's a precious metal. It's called one of the noble metals, but it's really an industrial metal for the most part, and for jewelry, and that's about it.
The fact is, the cartel realizes that platinum doesn't influence gold and silver. The reason that they have to hold silver down is because they know that if silver gets away, it will pull gold up with it. You know, we had platinum back in, what year was it, 2006 or 8? I can't remember what year it was, where it shot up to $2,000 plus.
Yeah, it was
had no
recently.
impact on the gold market because, you know, it was viewed as isolated. So they don't care. So platinum could very well go to, I mean, rhodium is another precious metal. It went to $7,000 or $8,000 a few years back.
I remember
no one paid attention to it. If you own it, that's great. Not that there's much rhodium out there, but same with platinum. I mean, I think it's a solid investment. Personally, I'm focused more on gold and silver, but you know, if you're a serious metals investor and you do your research, it could be, you know, something you want to diversify a little of your portfolio into.
Yeah, but for the average guy, you really don't want to bother with platinum. It's too hard to get. It's too hard to get rid of. I know they've got some coins floating around now, but it's such a narrow, tiny little market. There's no reason to focus on it at all, in my opinion, unless you're a pro or active metals person who, like you said, got the knowledge and sees the opportunity. Otherwise, it doesn't do it for me. But watching it is fun because you know exactly what's going to happen, because there's so few times in history where platinum has fallen below gold. And then when it does, you know what's going to happen. That's all. It's just the fun of it.
Well, you don't know, but the odds are that it will trade at a premium.
You'll have a real good idea.
The odds are that a lot of things, you know, the past is prologue and then it changes. So I don't know what platinum will do. I'm not too worried about it. If you own it, I think you'll do just fine. Yeah,
same here. It's just sport. That's all. So anyway, Andy, it's great talking to you again. Talk to you next week. Just a quick heads up for the people. Where do they find you?
MilesFranklin.com. We have free daily blogs. I do 5 days a week, as does David Scheckman. And if you have any questions, please give me a call.
All right, and you can always go to kerrylutz.com. We've got a banner link to Miles Franklin, who's our sponsor, and you can always get to them through there if you don't remember. Till next week.
Thanks a lot, Kerry.